Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The euro finished 3 cents from its spike high after the ECB tightened policy this morning. They left the rates unchanged as expected. However, they did move towards tapering their bond purchases. In September, they're set to lower their bond purchases from 30 billion euros down to 15 billion euros each month for the end of the fourth quarter, and then from there, they aren't expected to do anything. They aren't expected to raise rates until the second half of 2019. This is why the euro actually finished down 2 cents on the session. It's melting lower into the close and now below 116. We have strong support in a very wide range, all the way from 114.70 to 115.60. Yes, it's rare to see a support level that wide, but we knew if this thing's coming back down there, it's going to be tough to say where a bottom is. It can only now create a bottoming process in this wide range. On the flip side, the dollar index has had an extremely bullish outside reversal. It's actually now taking out the high from about a week or two ago upon the Italian crisis. So ultimately, what this means, if this continues to close out above 95 in the dollar index, that's the high from December, it's going to be a straight shot or an easy path. It should be to 96. Watch out for that. It's going to put tremendous pressure on this euro and probably send it to the lower end of that bottoming range. You have to watch where this euro weakness takes the dollar index. But it's not done yet. The Bank of Japan comes out tonight with policy. Now, will they surprise and actually take a step towards tightening on their own? Where the ECB was expected to tighten in some way or another, the Bank of Japan isn't. So they could surprise here, and this could be bullish the yen. We're not going to sit here and say buy the yen on hope. In fact, the yen looks extremely weak. But what's very interesting is there's a trend line in the yen below the market all the way from 2015. Now the June yen, which is going off the board, is much closer to the 90 mark. Now the September yen, which is now becoming front month, is closer to 91. It's still sitting right below 91. But what this means is it gives the yen more room to go lower before hitting that trend line. So call it about a penny from the September yen it has to move down. Now this is going to be a very interesting support level to watch. Again, it's a trend line from 2015. Watch what the Bank of Japan does. It's going to be around midnight tonight Central Time. And if this yen sells off, there's going to be a tremendous amount of support there. The dollar index has the yen in it. It's 57% the euro, but there is a chunk in the yen. So if the yen sells off, you're going to see further support from the dollar. Also, that euro that's melting away is going to support that dollar. So it's going to be a lot of volatility in the currency market tonight. Keep an eye out for it. Be patient. If you can look to buy this dollar index breakout on a weekly close above 95. Keep your stops tight because there's going to be a lot of volatility even next week. And again, you can be patient, be very patient. There's more down room in the euro and the yen unless we see some fundamental shift in the very near term. And where can that fundamental shift come from? Well, trade talks. You have the White House talking about imposing tariffs on China. They're talking about right now about 800 to 900 Chinese goods. This is supposedly less than the initial 1,300. So there's a lot of back and forth here. We could see an official announcement before the weekend, or we could have a cliffhanger heading into the weekend, and that may not be good for the dollar. So again, patience, pick your levels, be nimble, know what you're risking in the market. We have data coming tomorrow out of the U.S. industrial production and Michigan consumer sentiment data, so watch out for that. Now, lastly, the commodity currencies. The commodities themselves have held up well. You got some of the metals and copper being hit but copper performed very well over the past week and a half, so it's giving it back some gains. Crude oil is holding well. Gold and silver surprisingly holding extremely well given the dollar rally, but the commodity currencies, Aussie and the Canadian, are not. The Canadian's been very weak. There's a level that it's trading down to. That there's a long-term trend line from 2016 in the Canadian. Watch out for that, near 76. Again, we're looking at a June roll into September. It moves the Canadian up just a little bit, not as much as the yen, but it gives that Canadian more room to the downside before hitting that long-term trend line. Now the Aussie, we are long-term upbeat in the Aussie despite the poor session today. There is room for this Aussie to consolidate. Yes, after such a poor day-to-day between both the Canadian and the Aussie, you don't want to be in a rush to buy either of these, but watch for these trying to bottom out Now, the dollar strength is going to be a huge hurdle for these, but we remain upbeat. The Aussie and in the Canadian, it's a whole different story. But for the Aussie, we've had really solid data. Retail sales, GDP, going back to last week, we've seen some upbeat talk from their central bank. However, the central bank is one of the few out there that has not priced in a rate hike. If we see good data from Australia, you're going to quickly see that currency start to price in a potential rate hike. Now, there are some wild cards. Last night's employment data from Australia wasn't the greatest, but it wasn't bad. However, what was really bad was the Chinese industrial production, fixed asset investment, and retail sales. All three of them missed, and that's what's dragging down the Aussie coming into today before that euro lost ground. So there's a lot of volatility, a lot to watch. We're here. Email us, call us. If you want to call us, 312-278-0500. That's our number. You can email us questions about the currencies. We're here to talk about it. info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.